The risk was, I've got a good job and a good career and a great seat in a great firm that's growing, but this is my shop. This is, now. So I wrestled with that for a long time. Is this the right thing to do? Is it not the right thing to do? But all the while in the background, just continuing the conversation, because I'm a big believer in, and I would encourage everyone who's coming through their careers to not make decisions before the decisions are makeable. It's all about people for us. We couldn't do what we do if we didn't have brilliant people. And quite frankly, the brilliant people actually help us make it a success, because I'm not sure Peter and I could make it a success on our own. And in fact, I'm convinced we couldn't. So if we didn't have amazing people, then we wouldn't be able to sort of keep growing the business and keep pushing the business forward.
Welcome to the People Property Plays podcast. Today we are joined by Chris Webb, who is the co-founder and executive board director of Firethorne Trust. Firethorne presently runs two strategies. Their logistics and industrial team is focused on developing market-leading sustainable spaces across the UK, and their living team is committed to delivering high-quality PBSA and BTR buildings. Chris co-leads on strategic direction and decision-making, and is responsible for overseeing Firethorne's asset and investment portfolio and its finance operations. Before setting up Firethorne, Chris was head of UK and Ireland asset and portfolio management at Tristan Capital Partners, managing its UK portfolio of over £2 billion. Chris has also worked at Rockspring, property investment managers, and Cushman and Wakefield. Chris, welcome to the podcast.
Thanks, Matt. Thank you for having me.
Not at all. Well, look, you've had an amazing career, and I'm really excited to spend a little bit more time diving into it so far. But a place that I always start these conversations is why and how did you get into real estate?
It's a good question. I didn't, if I'm honest, have a design to get into real estate. My sort of schooling and university career were very generic. I didn't have real estate background or real estate in the family, so I was left at the vagrancies of university and the education process as they educate me as to what the career options were. So I finished Newcastle University with a reasonable 2-1 in business management, and that was as very generic. So it didn't really prepare me for much, but gave me a sort of an insight into the business world, and from there I sort of undertook doing work experience. So I worked in a number of different industries. I worked in the drinks industry for a bit. I worked in the investment management industry. I did my work experience at DTZ DTZ as it was back then in the valuation department actually, and these were sort of small minor work experience roles that I did for 2 weeks a month, and I did a spot in various other industries, all to test out what was out there and the opportunity. I think I even applied for an accountancy graduate position at one point, which would have been completely wrong for me, but so I wasn't completely set. And I think through the work experience that I had, I enjoyed the property industry, having not known a lot about it. I enjoyed the tangibility of it. I enjoyed that it wasn't desk bound the whole time, and I sort of decided to further that. So how I got into it specifically was, I struggled actually, if I'm honest. I struggled to get a job, and I took some advice from a senior individual in the banking industry actually, who I'd been put in touch with, who very kindly gave half an hour of his time to me, and he told me that there were endless number of undergraduates out there with generic degrees like mine, and if I wanted to sort of get into a reasonable job and have a good opportunity or a good ability to pursue that career, then I should go and do a master's degree.
And when he told you that, you said you kind of went to university, got 2-1, but it doesn't, you're not screaming to me that academia and studying is, you absolutely love it. Were you just kind of, what was your thought process at that time?
Well, I was a bit deflated, if I'm honest, because I as you say, I much more enjoyed the the pastoral and sporting aspect of university and my sort of life to date, rather than the studying in the academia. So I wasn't thrilled about the idea of going back to university and studying for another year. I was kind of hopeful that my studies were complete by the time I finished my first university degree. But anyway, so with having not particularly good job prospects at that particular time, I decided to take him up on his advice, and I sort of went back and did a master's degree in real estate and finance.
And you did that for a year at Cass Business School, and then you landed at Cushman Wakefield. How did that come about?
Well, I think pretty much all of us who did that degree, and I think there were 75 of us approximately did that master's degree, and I think everyone landed a place in a consultancy, or there were a few who managed to land places at principals and investment funds or pension funds, but most of us ended up on a graduate rotation at the various big agencies.
And you obviously did a bit of work experience in valuation. What seats did you cover, and did you start having a little bit more of an understanding of where you could take your career and what your different options were within commercial real estate?
Yeah. So I got a rotation. I got a seat in the rotation at Cushman Wakefield, and I didn't actually. So I was in the valuation team when I did my work experience at DTZ, not at Cushman's.
Fine.
So when I arrived at Cushman's, I initially started in the office leasing team, and that was my first rotation. I think there were 3 rotations on the graduate program at Cushman's. I was effectively started on the office leasing team, and then the office agency team, and then interestingly, I think in order to be an agent, you learn a lot about yourself when you're starting out in your career, and I certainly learned a lot about myself, having struggled to sort of find my direction of travel and struggled to find my sort of first job. I sort of realised that maybe I wasn't quite as good at everything as I thought I was when I left university, and I learned more about myself when I arrived at Cushman's, and I realised there were a lot of, when you arrive in the graduate teams, or certainly when I did at the agencies, everyone's preference was everybody wanted to work in the investment side. Because that's where the glamour was. That's where everyone perceived that you could have a better career and earn more money, and so everyone wanted a seat in the rotation on one of the investment teams. And I was no different. I did as well. So I started out in the office leasing team, and then we worked very closely and had a seat in the office agency team as well, or the office investment team, and it became very clear to me actually during both those seats that you had to be part of you had to be a salesman. You had to enjoy selling things, and you had to enjoy, sort of get a kick out of sales, because ultimately that's what you're doing. You're selling space, or whether it's leasing or whether it's investments. You're selling, and you're convincing people and persuading people and advising people that these are the right deals to do, and all of the rest of it. Amazingly, that did not turn me on. I actively did not enjoy that, and it became clear to me that I was not very good at that. And I was struggling at that stage to really see how people and clients specifically made decisions to invest in real estate.
What, just because you think, what's this guy or girl's motivation for trying to flog me this? Is it just to get a fee?
And to a certain degree, why is for example, an office building in the West End, why is 5% a good deal? Because you'd have all of my sort of colleagues, my more senior colleagues at that time said, Aviva should buy this. It's a fantastic deal. It's 5%. And I couldn't really understand why 5% was a good deal. It didn't make any sense to me. Why not 6%? Why not 3%? Why did people have, how do people make money out of it? If they're buying it at 5 and selling it at some point in the future, how are they, what's driving those investment decisions? Why are they making these decisions as opposed to just wanting to get a deal done? And, it's a great deal. I can get my client at this price and they should do that deal. And there was certainly from my perspective, I had no understanding of how and why those decisions were taking place. And that's where I was interested. I wanted to understand that. I wanted to understand how money came into real estate, how people were making these, how these fund managers got their money, how they were making decisions about buying and selling and managing property. And I had no real visibility of that at that stage. You got to choose your third seat, and I campaigned very hard to get a seat in the corporate finance team, because they dealt with debt raising, or to debt funding, equity raising, and much more on the corporate finance side. And they sort of managed advisory and advised funds and sort of new managers raising capital, which was at that stage a bit opaque to me, but it sort of was very attractive. So I thought, well, this is going to explain to me how people make money out of real estate, because at the moment I don't understand.
Were you good at maths growing up, or did you have an affinity to kind of numbers?
Yeah.
Okay.
So I was much more mathematical. I wasn't good at much academically, but I was stronger at maths than I was at English.
So that was the kind of route. And what did you learn during your time there? And I'm assuming you got your letters and.
Yeah, I got my MRCS. So I did the qualifications that I needed to do. I did the IMC certificate as well, and I was taught to model. Whereas again, most of the industry at that point in time worked on Argus, and the appraisals went through a sort of a black box machine, which again I didn't really understand. And whereas the corporate finance team, everything was based on Excel, and there was some very, very smart guys in that team who I'm still in contact with actually, who taught me how to model. They'd come from Ernst & Young as part of that sort of corporate finance team, and they were very capable, very mathematical, very analytical. And so one of the best skills that I learned during that sort of period and during that seat was how to build a financial model from scratch.
And who were your clients at that stage in the corporate finance team?
Mostly the pension funds and sort of small managers. So that was more on the equity raising side. And again, being a sort of a graduate and a junior, I was exposed to both sides of that corporate finance team, which was the equity raising side and the debt, third-party debt side.
So you got a bit more comfort, a bit more insight in terms of like what drove some of these financial transactions and why they made sense.
Yeah.
You then moved to Rockspring, which we'd call it a boutique fund management, investment management business.
Yeah.
How would you describe them at the time? Because obviously Patrizia swallowed them up a few years ago.
Yeah, they did. Yeah. Rockspring was I would say, sort of boutique investment management business with multi different number of Rockspring branded funds as well as some separate account mandates.
And why did you decide to make that move? And what was the role that you were doing there?
It was all. I mean, so I ended up being in that seat at Cushman's. I can't remember now, maybe five or so years. Okay. So I stayed in that corporate finance team, got my qualifications, and sort of stayed there a few years longer. So I kind of grew up on that, and as I learned more and more about it and became a bit more proficient about actually how these funds worked, what kind of target returns they were, what drove their decisions, whether it's liability matching or whether it's sort of to make sort of opportunistic or value add returns, or what the core strategies were around people raising money and investing into real estate. I became much more interested in kind of being part of that, because again all of those learnings that you make about yourself in your early career, I learned that I enjoy numbers. I didn't really like advisory and consultancy. I much preferred being a master of my own destiny, and I was very comfortable making decisions. So I wanted to be in a position where I could, implement decision making and be in control of investments as opposed to advise others how to make investments.
So you landed at Rockspring. Did you look at a lot of other businesses, or?
I did, yeah. It's an interesting one, yeah. So at that point in time, so it was a very turbulent time, because it was sort of 07, 08, and there was, I won't go into it, but everyone knows what happened in 07, 08. A lot of people lost their jobs, and in the real estate industry and the agencies were no different. And I was fortunate in that I was junior enough to to not be super expensive. And I had been looking for a while to move from the agency side and the consultancy side to principal side. So I got a kind of a number of opportunities to interview at potential client seats, and two job offers that I got actually were Rockspring and MGPA.
Now BlackRock.
Now BlackRock, correct. So. And it was interesting that I don't know whether I'm allowed to name other people through this podcast, but there's some, people's a big thing for me. The whole way through my career, people have been very, very important and still are. And, I believe you meet some amazing people through your career. And I certainly have, both at a sort of relatively aged level now that I am, but also back in the early days, and I remember one man specifically. I'm not going to name people, so I'll spend all day.
Even though it's called the People Property Place podcast.
Yeah, exactly.
Front and centre.
Yeah, it's a very important part of the industry, right? And it's and this one individual was a partner at Cushman's, very, very smart guy. I'm still in touch with him, albeit infrequently these days. But he's a great guy, and I confided in him that I had these 2 job offers, and I wanted to make the right decision about my future, and I sort of valued his advice, and I valued his perspective and his view, and I knew he would give me a perspective, irrespective of whether he thought that I should be leaving or not. He would give me his view, and he did, and his view was excellent. Actually, MGPA had just raised a huge amount of money, and had a huge amount of firepower and capital to deploy into the market, but they had opportunistic return requirements, and they needed 15 to 20% IRRs and all of the rest of it, and were leveraged, and in his view more risky, especially given where the market was at that point in time. And Rockspring had a blend of funds, from managing pension fund mandates to their own sort of segregated Rockspring branded funds, where they sort of multi-LP funds that were a bit more value add and opportunistic in their return requirements. And his perspective for me was, I think Rockspring is safer. They have a broader range of funds. They will do better and have a less turbulent time. It'll be a better place for you to learn how this works and how that side of the fence works. And MGPA may be more exciting, and there may be bigger numbers involved, but I think you'll learn more, and you'll get a better grounding at Rockspring. So that was the decision I made.
Interesting, because I reckon the majority of people would have gone for the more opportunistic, higher octane, sexier numbers at that period. So you decided to go to Rockspring. What were you doing at Rockspring, and what did your role look like, and how did that 3.5 years or so play out?
So I joined as effectively as kind of an analyst, albeit Rockspring didn't call them analysts, and there was a group of us, probably only about 4 or 5 of us, who started in that role, and Rockspring was expanding, and they just raised a few more mandates and expanded as a business, and they needed that sort of general support. So it wasn't analysts in the sense of straight out of university, there just to sit behind a screen. We were very much qualified real estate individuals, but we had a sort of a numbers capability that maybe most surveyors didn't possess at the time. I think it's probably much more sort of educated into young surveyors now to understand numbers and financials, but at that specific point in time, it wasn't a requirement. So I think those of us who went there, and I know you've interviewed one, had one on the podcast already. So we went there, and we were sort of part of the same pool, and it was an amazing opportunity actually to experience the broad range of what a kind of a fund management, investment management platform does. So we were running models both on new acquisitions. We were running models on fund level, portfolio level, to sort of report to investors. We were getting involved in the acquisition due diligence. We were out on site. Each of us got attached to a different fund and a different mandate. So that was our sort of principal area, albeit we could float across sort of resource as we needed, or as was needed by the business. And we had a great grounding. So I was working for a great guy, another great person in my career actually, who I still see regularly. So I was working for a guy called Richard Baines, who is the managing director of Chancery Gate, and a great guy to learn from, very impressive individual. And I was involved in meeting the investors, managing them on sort of biannual meetings. I was running the numbers for the fund. I was supporting asset management where needed. I was getting involved in the debt conversations and managing the valuations on a quarterly or sort of 6-monthly basis as required. So it really was a real full picture of the fund management sort of process from start to finish. I was helping sell, so I was doing everything. So it wasn't just a acquisitions role or an asset management role. It was very much, you had to get an all-rounded skill set. So the learning was very steep.
Yeah, when I first started getting into recruitment and such, I actually worked with Richard and put a few people into the FAT team, as it was called.
Yeah, that's exactly what it was, which was the most terrible name.
Yeah, but it was an amazing opportunity, and I think I did 3 or 4 deals with Richard just in terms of putting people probably in behind you when you were no longer with the business, and a phenomenal grounding, and some great experience. What you left after 3.5 years or so and moved to Tristan. Why and how, and what was it that you weren't getting at Rockspring that you thought you could get at Tristan?
Yeah, I don't think it was specifically that. I've never looked at moves in that way. Rockspring was a wonderful place. I got to sort of have that broad level of experience, and I think I was hugely inspired by the work that I got to do there, in terms of what I learned. That my learning was so big and so steep across the board that I became a much more capable professional, I believe, there, and I was much more confident in what I was able to do, and my thought process and my decision-making process, mostly because Richard Baines beat it into me, and he taught me an awful lot, as did others. There'll be lots of people, I'm sure, who may hear this from Rockspring who'd be disappointed I don't mention them, but Richard was was kind of my sort of day-to-day, and really I think where I got to as I grew and I learned was Richard was the fund manager of that fund, and he was he had an aspiration to raise more funds, and he was always going to be the fund manager, and I think I knew that I'd got to a point where I was capable of spreading my wings a bit and taking more responsibility, and I was comfortable that I was ready to take more responsibility, and I wanted that challenge. And sitting in the seat that I was in Rockspring, I was going to be unable to do that. So an opportunity came up at Tristan, and I was, it was a step up for me, and I sort of embraced it, grabbed it with both hands, and decided it was the time.
Because you had quite a broad experience, and you touched on quite a few different areas, geographies and debt, equity transactions, fund management, asset management, probably some development work as well.
Yeah.
You went in the asset and portfolio management team. Why did you decide to pursue that side of the business rather than the transactional side?
Yeah, it's a great question, and I guess it's only when you sort of walk through memory lane like this that you remember the nuances. So I actually was approached by a headhunter or a recruitment agent for the role at Tristan, which was for an asset management role, as you say, an asset and portfolio management. And I turned it down because, again, the experience that I had and the breadth of the experience that I was getting wasn't asset management. And I didn't consider myself an out-and-out asset manager. I considered myself to have more capabilities than that. So I turned it down originally, and I think they went out, and I might be misremembering this, but this is the certainly my memory of it. But I said, went and saw them, and I said, that sounds great, but I'm not an asset manager. I think what you need is somebody who's, very specific asset management. I've got a bit of a broader role than that now, and I'm looking for a broader role, and I don't necessarily want to just do asset management only. So I think they interviewed a number of other people, and I think that the context of that Tristan experience for me was that they were a small business at that point in time. They're obviously a huge business now and a fantastically successful business, but at that point in time they were relatively small and had were growing, but they'd done a huge amount of fundraising and deal doing in Europe, but they had not done a huge amount in the UK, and they were just beginning to grow their UK strategy, so that there was not very many people in the UK team at that point in time. And I think they went away and interviewed a number of other asset managers, and I think they went around the houses and realized that actually probably what they wanted was someone who had a bit of a broader skill set than me, that could add a bit more value as they grew that element of of the business. And again, I wasn't coming in at a particularly senior level. I was coming in at a very sort of mid-tier level. So it wasn't like I was coming in to run the whole place at that point in time. I certainly wasn't. But I think they came back to me after interviewing a few other candidates and thought that actually, do you know what, they could adapt the role to suit me, and they obviously liked my character for some reason, and they came back. So I got a second bite at it, and that's when we kind of agreed that this was the role that I wanted, and I wanted to have a little bit more input in the acquisition side. I didn't want to lead on acquisitions, but I was very happy to support. But I didn't want to just be a sort of an asset manager pigeonholed in just sort of doing the asset management work and not having the ability to to spread my wings a bit. So we kind of agreed that, reformed the role, I guess, around what I could do and what I wanted to get involved in, and I decided that it made sense after that. So I went for it.
Yeah, because probably at that time, still a lot of the businesses had the transactions team that didn't really talk to the asset management team. It's just like, oh, we bought this. What can you do with it?
Yeah.
It's probably the advent, through Rockspring of it. Actually, those two teams working much more closely together, and the asset management team inputting with the transactional team to actually say this is where the rents are going, this is the yield, etc., rather than it just being an us and them.
Yeah. Well, I think that I'm very much of the view, and I think you're right. There are lots of businesses that work like that. I don't think that if you want to sit in the principal side of life in most real estate businesses, I think you need to understand as much of it as possible. And for the most part, and certainly the way Tristan did it and we did it, was that the acquisitions team, they did the acquisition, they did the origination. But it made no sense for the acquisitions team, who were the deal guys, and to do the sales. Or certainly in my view, it didn't. And the way we worked in the UK side of the business, it didn't, because you implement a 5-year business plan, and I control that, I run that, I report the budgets, I do everything. We make all the decisions on the leasing, the commercials, the capex, the changing and the repositioning, all of those things, which are all delivering the economics and the kind of fundamentals of the business plan. And then to hand it over to someone who hasn't been involved for 5 years just to run a sale process, that makes no logical sense to me. So certainly the way we did it was, the acquisitions team, which was effectively run by my now business partner. Him and I worked very well together. I supported him where he needed support on the acquisitions, and he wasn't threatened by my support in any way, shape, or form. I then took over the business plan. He was the dreamer. He came up with a plan, and I sort of executed and implemented it, and then I managed all of the sales. So it was a transactional role as well, and as well as the asset management and the commercial side. So it's a bit of a hybrid. Yeah,
and you can get all the experience that you really wanted, or you could leverage from your Rockspring days.
Yeah.
The portfolio grew to over £2 billion. What kind of assets were you dealing with in the UK?
It was quite a different multi-sector strategy, really. I mean, the Tristan funds were at that stage were by their nature opportunistic, and sort of they were multi-sector funds. They were multi-jurisdiction, multi-sector. So there was no pre-described sector that you needed to sort of invest in. So it was it was opportunity led, which was super exciting, because you got to learn about all of the different sectors and look at deals and be exposed to lots of different managers and tenants and I guess sort of, interesting people across the sector. And so we did quite a lot of offices. We did, at that point in time, quite a lot of retail warehousing, shopping centres. We did some student housing. And I think probably that was the most one. We did a little bit of industrial, but not a huge amount at that point in time. So,
but you could apply your skills in a bit more of an opportunistic environment across multiple different geographies. UK, but multiple different asset classes, and really, I guess build on the skills that you had. You touched on your business partner, your now business partner, Pete Mather.
Pete Mather.
How did Firethorne come about? And had you always wanted to set up your own business? And can you just run me through that?
Yeah, I think that's it's an interesting, because we were at Tristan a long time. Pete was there longer than I was, and I think or certainly my take on it is when you do the kind of, I guess, investment management, fund management role, and the seat that I've always sat in, whether it's Rockspring or at Tristan, if you were minded like me, and I think a lot of people would be, if you do that, you sort of at some point you think to yourself, gosh, I wish I could do this for me rather than for somebody else, because and I've heard a lot of people on your podcast say, and I totally agree with it, which is, real estate's not rocket science. None of us that got into this industry, if we were much smarter, we'd be lawyers or accountants or bankers. But I think it's not rocket science, and you can get very good at it if you pay attention to the fundamentals as you grow and as you sort of grow through your career. And I think my attitude was, by the time I hit Tristan, it was probably sparked by my Rockspring days, and it was watching the younger guys, the fund managers, the Richard Baineses and others of the world, who were at a relatively young age, in their sort of young 40s or late 30s, they were fund managers, and effectively those were their platforms. They put the strategy together, they sold them, they used the kind of platforms they worked for, the Rocksprings or the Tristans or the other fund management platforms to sort of raise the equity. But ultimately, it's kind of their strategy and it's their charisma and their credibility and their track record alongside the platforms that allows them to raise the money, and it's the LP's belief in whether those guys can deliver the strategy, and if you can't pitch well and you can't convince people that you're going to make the money, then they're not going to invest in you, no matter how good the platform is. So I think that was a stepping stone for me to people running their own businesses. They were almost in charge and running businesses within businesses, and I always thought to myself, if I get good enough and I get sort of experienced enough, I would love to do that. And the sort of older I got and the more experienced I got, so I went through Rockspring and Tristan, and there was definitely a spark in the back of my head, which was, if I ever get the opportunity to do this for myself, I would love to give it a shot. So that's how it was always there. And I think I think you're one of those people, you either are quite risk on and you're happy to sort of think like that and take that challenge. As you've started your own business, but you either think like that or you don't. And there's some people who would terrify, and there's other people who would get excited and turned on by it. And I'm just one of those people. And I guess I'm just fortunate that the opportunity arose. And I'm a big believer in that these opportunities will only come around once or twice, maybe only once, if that, in your lifetime. And you make decisions at that point in time to either pursue it or not. And I guess how did Firethorne come about? Really just from that. And I was always on the lookout for opportunities, and I was always on the lookout for conversations. And part of what I think makes our industry great and inspiring is that it's a sociable industry. It's all about network. It's all about interacting with people, and you meet some amazing people along the way. And I was fortunate enough with Pete that we met some fascinating people, and a conversation sparked an idea, and the idea drew legs, and we sort of found ourselves about 6 months down the line of these conversations, thinking, God, if we don't do this, we may regret it for the rest of our lives. We didn't have a business plan particularly. It's not like we put a business plan together and we went out to market and we tried to raise capital. And it was a chance conversation that we jumped on, evolved, and turned into something as opposed to something that just arrived. So, there was an awful lot of time and effort, and effectively I felt for a long time, and for a long time I felt like I was running two jobs, because as our current shareholders and sort of business partners in Firethorne are US family offices, and so they don't work on the same time zone as us. So I would do my full 12-hour days at Tristan, and I loved it, and it was a great job and a great place to work. And then I'd get home and have dinner with my wife, and have a quick conversation with her, and then I would get the laptop open again, and I would work on what is now Firethorne, but what was not anything for sort of 6 to 18 months probably before we got it off the ground.
What was the risk from a personal perspective at that time?
Everything really. I had a wife, a young family, a mortgage, and none of those are cheap to run. Certainly not my children, and they're very young and they need all that sort of stuff. And so I guess the risk was, I've got to good job and a good career and a great seat in a great firm that's growing. And but this is my shot. This is, and I wrestled with that for a long time. Is this the right thing to do? Is it not the right thing to do? But all the while in the background, just continuing the conversation, because I'm a big believer in, and I would encourage everyone who's coming through their careers to not make decisions before the decisions are makeable. I'm a huge believer in that across everything that I do, personal or private. Lots of people stress over decisions and decide before they have a decision to make, they choose not to do it because they're scared. And I don't think that decisions are never made until they're made, until you have to sign the dotted line ultimately.
And worrying is not a proactive
worrying
emotion.
It's not a productive emotion, for sure. So we, whilst I was having those thoughts and those questioning myself and debating it with Peter and my wife and my friends about whether it was a sensible thing to be doing, I still pushed it all the way, and I said, look, we'll make the decision. Let's make the decision when the decision's there to be made. Do these guys really want to do this? Are they credible? Are they 100% there? Do Peter and I definitely want to do this? Do we believe we can do it? Because if you don't believe you can do it, then you'll never make that decision. But lots of people make a decision before they've got to the decision-making point, and that'll be one of the biggest things that I'm proud of my career, is I've always taken the time to get to that decision-making point and made the decision at the point in time, rather than let fear or concern stop me in my tracks.
You touched on the fact you've got 2 family offices behind you. It's in the public domain. Unbelievable. Billionaire US family offices behind.
Yep.
Can you just tell me a little bit about their businesses, and then you leave Tristan setting up the business. Like, what was the strategy? What was the plan? What have you been working on, and how did that kind of look?
Yeah. How long have you got? So it was. We're super privileged and lucky to have met these guys and to be in business with them. And I think that's a sort of an important point for most people. I think a lot of the market doesn't necessarily still understand, who we are and sort of how we're set up. But we're a UK limited business. We just have 2 US shareholders in the business. So we're onshore. We're not a fund. We're not offshore. We're not, we haven't got LPs. None of that sort of stuff. And again, that was one of the very refreshing things about the conversation coming from the private equity space and the investment management space, where it's all about structures, and there's a huge amount of it. And again, I know you've had people on talking about all of the different structures and tax and offshore versus onshore, and LPs being sort of either tax averse or non-tax paying entities. Therefore, structuring is a very important part of real estate and other asset classes, in that if you've got pension funds and insurance funds and investment funds that don't pay tax in their jurisdiction, any tax that they have to pay through a structure like a private equity structure is leakage for them, because they don't pay tax. So,
and also the cycles that 5-year cycles or 3, 5, 8-year cycles, they're beholden to that regardless of the market conditions.
Yeah.
And there's pressure as well from being an operator or an LP to kind of deploy that capital, otherwise you might lose it. So I'm intrigued, because it's quite simple and straightforward.
Very, very simple and straightforward. And I think that was what really attracted Peter and I to the conversation. Was actually we were in that, fully involved in that private equity world and fully kind of up to speed on how it worked and the structuring of it and all the rest of it. But it was complicated, and it is complicated. I guess the simplicity of what the conversations we were having was that the US families that we're in business with are both tax-paying families. They pay full tax in the US. They're domiciled in the US and they pay tax. So it doesn't matter whether you structure them offshore or whatever. They're still going to pay tax in the US. So they were ambivalent about tax, because we actually paid more in the US than they pay here at that point in time, before things have changed. But they pay more tax there. So they were kind of ambivalent as to whether if they did a good property deal and they paid tax in the UK, it offsets what they would have to pay in the US. So they're paying tax either way. So you suddenly take that very simple fact, and structuring goes out the window, and so the only way to do it was a simple way to do it, which is, let's just be a UK limited company, which we are. So we have shareholders like anyone else. We've got 2 US shareholders, and Peter and I are shareholders, and that's the nature of it. And it's as simple as that. So it's just some of the shareholders have more money than others, which is obviously helpful given what we do.
Yeah. So you drop the kids off at school, you go around to Pete's house, sit at the kitchen table, 2 of you, got these shareholders, set up a limited business. What's the strategy? What's the plan? What are you going at? How does that look at that time?
I think, it was a fascinating journey, and it was something that we evolved, and we sort of grew together as a conversation. You asked about who they are and what they do, and one family is from a financial services background and has made their sort of fortune in investment banking and financial services. They also have a private equity arm that does a huge amount of true private equity, in terms of buying and selling companies, they've done a bit in Europe, but mostly in the US. And I think they have a lot of companies that they are invested long-term in. So they get private equity and they get long-term investment, and that's sort of investing the family money. And then they have the family office side of the business, which we're a part of. They didn't have a huge amount of exposure to real estate, and they love the UK, and they were keen to do more in the UK, and they had just set up an office in London for their investment banking division, and an office in Europe. So they were sort of expanding into the UK and Europe. And again, we just happened to have a conversation with them at the right time, and they were interested. They were keen to. They were growing their operational business in Europe, in UK and Europe, and they were keen to grow their capital base as well. So they saw real estate as a potential diversification play for them, and for them as much as me, it was about people. It's about the right people, and if we hadn't liked each other, conversation wouldn't have gone very far. But we did, and we got on, and they enjoyed our thought process and our strategy. And it like I say, from the first conversation to actually setting up the business was probably 18 months. Okay. So, and there were many conversations, as you can imagine, along the way. So they were, that's their sort of background, and they were, sort of happy for us to, sort of grow a strategy with them and give them our insight. And again, they were keen to go into business with us because we had the real estate expertise and the market kind of expertise and the market knowledge, and they had the money. So it was a kind of a good duo. And I guess the second shareholder was a contact of theirs that they decided to bring into the picture, because they got a good working relationship in the US, and they know that the second investor had good real estate expertise as well, and they were always keen for new business opportunities, and again, are big believers in people. Yeah. So if you meet the right people, so they brought those guys into the frame, asked us if we were happy for them to do it, which we obviously were. So the second family are also a fascinating family in that they made all of their money in automotive, so cars, car sales, car servicing, franchises, after sales, insurance, reinsurance, all of this sort of stuff. So they through that business had a huge amount of exposure to real estate, because they would buy their own plots, develop their own plots. At one point in time, I think they were 100 plus dealerships across the US, and they owned a lot of that real estate and had developed a lot of that real estate themselves, and that had got them into real estate sort of investment and development on their sort of family office side, whereas their principal business was the car business.
So in terms of your strategy with Pete from a real estate perspective, because at this stage you touched core property, you touched value add, you touched core plus, opportunistic, different geographies, different asset classes, different types of clients. What was the real estate strategy, and what kind of kit were you looking for?
Yeah, good question. To answer it honestly, we sort of wanted to do a lot more of what we had been doing at Tristan and Rockspring, which was a sort of a value add to opportunistic strategy, which was sort of purely opportunity led, spotting opportunities where there was a disconnect or an arbitrage to be made, and we had good capital that we could act quickly, and so it was the initial strategy was much more about sort of up and built and repositioning of up and built or rebalancing of up and built, and probably theoretically we envisioned that we were doing about 70% of that, and 30% would be towards the more risky development side. I think the reality of what we found whenever we set up was that we were in a very late cycle part of the market. It was really difficult and really challenging to underwrite deals and find upside. There was always more risk to lose on the downside than there was on the upside in that early stage of the first 6 months of Firethorne, when we were sort of putting ourselves out there and trying to look at everything. And we learned a big lesson in that as well. We were spreading ourselves far too thin. We were looking at everything in all sectors, and we were not focusing and specializing. And that was exhausting and unfruitful, if I'm honest. So there was stressful first 6 months. We didn't get close to anything. We suddenly realized that we were a new brand in the market, a new name. Our professional track records counted for little in that sort of bid list when you're bidding on assets, because really it's performance and credibility that matter. Do you have a track record as a business? Are you performing? Have you performed? Do you pay the money when you say you're going to pay the money ultimately? And we were in plenty of bid lists where we wouldn't have got the shout even if we had been the highest number, because we were the least. We were a new entity and we had no credibility. So that was a sort of an interesting lesson. And we didn't have conviction about the point in the cycle and the opportunity to make good returns from standing assets. So we sort of changed our focus and sort of, I guess, the thought process. We spent a long time on this. We actually had sort of an offsite, not just for the two of us. At this sort of stage, we were a few more. We were about 4 people and 5 people maybe, and we had an offsite with the 5 of us where we just ignored everything and we said, this isn't really working. We're not really getting anywhere, and we need to rethink what we do. And we reviewed it all, and everyone had homework. They went away and came back, and we sort of 2 elements of that homework, and I remember it very clearly. And the conclusion to this is slightly embarrassing because we kind of arrived at a very obvious place, but it took a reasonable amount of work and homework from all of us. And we went away, and each of us took a sector or two to spend a few weeks beforehand diving into the sectors and say, look, what we've realized we need to focus, and we need to focus in on a strategy in a sector as opposed to be opportunistic and sort of sharpshooting deals in different sectors, because we're not getting any traction and it's not going to work. And we need to get moving, and we need to find the deals that make sense to us. And we sort of agreed that everyone take a sector or two and come back, and we spent 15 minutes talking through the pros and cons of those sectors with each other and saying, look, this doesn't work. This doesn't work. This actually looks like it does work. And there's tailwinds, there's headwinds. So it was relatively basic in its, or high level in its thinking. But ultimately, where we got to was off the back of that day was that we decided it was late cycle, and we wanted to build and develop product into the capital that wanted to own it, because there was a huge wall of capital. And what I mean by late cycle is there's a huge wall of capital that wanted to own income and own product, and was very comfortable paying for best-in-class product.
And what was that product, and what was that?
That's where we got to. So we came to the conclusion at the end of that day that we should be developing sheds and beds. So not rocket science. Lots of smarter people had come up with that long before us, but it took that exercise for us to sort of come to the conclusion that that's what we needed to focus in on. So we then took those away and said, okay, well, we've done a bit of both, and we had a development manager on board as well who's excellent, and so we had the expertise. And one of the aspirations of Firethorne has always been, with our US shareholders, has always been for us to be a completely I guess, full service property company. So we don't need development managers, we don't need asset managers external. We do all of that in-house, and that's how we've grown the business, and that's still what we plan on doing and are doing at the moment. We obviously have external service providers, architects and surveyors and all kinds of things, but in terms of the asset management, the development management, the finance, acquisitions. We do all of that in-house. That's all proprietary, and we have those skill sets. We're comfortable with that, and that's what we wanted to do. So we looked at both the bed space and the logistics shed space, I guess, and the opportunity to break in as a new entrant into the logistics market, and specifically at that point in time for us, the mid-box logistics market was it was going to be a lot easier to get a foothold in that market than the living space, than as we sort of branded it now, the living space. That was harder. There were a lot more players in it, and it is as a sector, there are sort of subsectors, and there's a lot more subsectors, and it was just going to be a harder task.
It's more complex than just a couple of steel and steel structures.
I don't say that too loudly. There'll be a lot of people in the logistics sector that would hate you for that. But sheds are more simple in their structure. You can put them up in sort of 12 months or less if you're going well. And I think where we saw our opportunity very much was that we were effectively an investor developer. We had our own balance sheet, and so we were investing our own money, not someone else's. And we had the ability in-house and the skill set in-house to develop and deliver and man. And we're not frightened of planning risk. Happy to take planning risk. And our shareholders do that all the time. We're comfortable with that. So I guess that's where we saw our opportunity, because a lot of our competition in that market was, there were expert developers who've been in the game a lot longer than us, but they didn't necessarily have access to their own capital in the way that we did, and they would have different capital sources and different capital providers that they've worked very successfully with, and all the rest of it. But we saw that as a small niche for ourselves, and that we could turn up, show someone our bank balance, and say we'll complete in 10 days, and we don't need anyone else. We don't need an external development manager. We don't need this. So you're and with Peter and I there as shareholders, you're talking to the guys who are making decisions. We're here with our bid, and we complete in 10 days, and we're good for it. So
that focus enabled you to assemble an amazing portfolio of assets. It must have been a great relief to get your first one over the line.
Yep.
Can you talk to me about that?
Yeah, absolutely. I mean, our first logistics site was in Northampton, and it had been on the market for a while actually, and was under the control of another party. We bid on it, but not won the bid. And but we'd done a lot of due diligence, and we felt like we understood it as well as anyone else, if not better than anyone else, and a few of the risks. And I guess we felt we'd priced those risks into the offer that we made, and we made a big play for that site, and we got to know the vendor, and we'd had interactions with the vendor in our previous lives, so we sort of knew where we were, and we'd made as strong a case for ourselves as possible. And we were very disappointed not to get it actually, and effectively the site came back to us. The people that had it under offer, for whatever reason, couldn't continue with it, and we were given a shot, and that was really what kickstarted it all for us, because we'd looked at a lot of sites before that and had our conviction and focus and credibility hadn't quite. You've got to start somewhere, right? And we'd lost out on 2 or 3 sites that we had huge conviction on, but Northampton was the one that kicked it off for us. So.
And following a relatively short period, you assembled an amazing portfolio, as I alluded to, that you sold last year to Kane International, £550 million.
Yeah.
Can you just talk to me about that process of building that up, building the business as well? Because you've hired quite a lot of people. No doubt there's an additional skill set that you had to learn, and Pete learned. You had to look quite closely at your roles and responsibilities and how you divvied that up as well.
Well, I think that's a constant sort of point of evolution for us. I think what I've learned we've been in business as Firethorne for just over 5 years now, which sort of staggers me how quickly it's passed. It also feels like it's the only thing I've ever done, so it's kind of a bit challenging. But it's growing the team takes time, as you know, and finding the right candidates and the right people is a challenge. And that's as much skill set as cultural for us. And I think, definitely the way I look at life, and I know the way Peter does as well, is that we are huge. We're all over it's all about people for us. We couldn't do what we do if we didn't have brilliant people. And quite frankly, the brilliant people actually help us make it a success, because I'm not sure Peter and I could make it a success on our own. And in fact, I'm convinced we couldn't. So if we didn't have amazing people, then we wouldn't be able to, sort of keep growing the business and keep pushing the business forward. So we're very lucky. And I think we have a sort of a motto between the two of us, which is, we hire for character and train for skill. So that's very much how we kind of focus on people and how we're bringing people into the business. And again, the business functions well if we've got the right characters and the right people and the right energy. And character is not just about having a personality. It's about having it's about having work ethic. It's about having desire. It's about having ambition. It's about like enjoying being part of a team. It's all of those character traits are super important. It's not just about being ambitious and being able to deal with people and handle people. And you can't train. I don't think you can train for many of those skills or many of those traits. Whereas you can train someone to work a model, or you can train someone to understand real estate.
Yeah, we split it into behavioural and then technical skills, and it's like how are we forensic over assessing both of those pieces when we look at working with clients. You've recently announced, or not that recently actually, Marcus Weeks has joined your business to head up your living strategy. Can you just talk to me about the evolution of the business and you identified obviously sheds and living as the kind of core focuses that you wanted to go.
Yeah.
You doubled down on the shed market. At what stage did you start going, actually now is the time to bring in an expert to kind of front that living space, and what within living are the areas that you focus on, because it can be quite fragmented?
Yeah, sure. We so I guess we the logistics side of the business helped our growth, and we were able to once we got going on that first deal, that Northampton deal, and we did another few deals quite quickly after that as we got a bit of reputation in the market and got a bit of credibility. And we have what we've been able to establish ourselves is a kind of a good name in the UK logistics space, which is fantastic, and we've built a team around that, and I guess we see that very much as the core part of the business. And when we sold the portfolio to Kane last year, we see it's very much a partnership with Kane in that they're the landlord now, but they have re-employed us to develop out the rest of the portfolio and to lease and asset manage it for them going forward. So we're sort of helping them grow that, which is help stabilize the business and has given us Kane are a huge operation and a fantastic business, and it's helped us to stabilize that side of the business. And what that helped us do was have the conviction to diversify our business, and because, as I said, it was back in 6 months in where we decided that developing beds and sheds was what we wanted to do. We focused on sheds to begin with, and we've definitely over the years, and it's been 4 years since we had that, 4.5 years since we had that initial sort of strategy session, that at some point in time, if we managed to stabilize the business and if we grew the business to a point, then we would love to diversify and effectively roll the business model into a different sector. And it was going to be beds, and it was always going to be living. And again, it would be about finding the right person to do that, because we would need someone with that skill set and that market expertise in order to help us deliver that strategy. And so that was, I feel like that was it wasn't something like we sold to Kane and then we decided to jump into living. That's been part of the business plan, for a very long time. But we weren't at a point in our growth or our story that we had the conviction to jump into it. So I
guess it made sense recycling some of that capital. So what is the plan with the living side of the business? Because Marcus Weeks has obviously come in relatively recently to head that up.
Well, I guess the plan is to roll out the same model that we've sort of rolled out on the logistics side, and again, keep it super simple. We're not a complex business. We want to buy land, develop, get planning, develop. The focus is PBSA and build to rent, but probably with a slant at the moment specifically on PBSA, and that will probably be the case for a year plus, albeit if there's a good BTR deal when we are looking at some then we will definitely do that as well. But the slant is definitely PBSA given the market, and I think we have conviction around the growth of that market and the undersupply of beds in the core UK university towns. So again, it's a simple business model. It's exactly what we're doing in Sheds, which is buying the land, getting entitlement and planning on the land, developing the right product, making sure the product is absolutely right, and then leasing it and selling it. But in the case of student housing, we'll work with operators to sort of provide that platform, that operational platform. We don't intend to grow the business in an operational platform, but we'll work with sort of best in class operators to run the assets and sell. So ultimately we are a developer trader on both sides, and it's no more complicated than that. So a super easy brief for Marcus. So if he's listening,
yeah, Marcus, you've got a really easy job. Just get on with it. Mindful of time, and as we draw to a close, a question I ask everyone who comes on the podcast is: if I was to give you £500 million of equity, who are the people, what property, in which place would you look to deploy that capital? Now, you've done it in the logistics space, you've got the team, you're going to be doing it in the living space. I guess the piece that I'm going to drop on you now is, if you were to go outside of that, which sectors would you look at running at?
Gosh, that's a challenge. I haven't really thought of that, because I thought my answer to the question was going to be us and the two sectors that we're in, which is pretty boring. But I think the reality is that there are some excellent people in the industry. I'm now a real believer that the kind of world has changed slightly from a real estate perspective, and whether that's specifically with COVID or just a general attitude. But I think, best in class space, ESG credentials, great proper prime grade A kit is where you are going to make money in real estate over the next cycle. You can't produce secondary assets or secondary quality and expect to be profitable or make money. So I think best in class is absolutely where it is, and I think the development of assets is certainly where I think people will be able to ensure profitability and make money, because that's where the investment world is going to want to be. There, all of the investment funds have changing criteria in a sort of an ever sort of more discerning sort of capital pool that wants ESG credentials. They want best in class. They want all of these boxes to be ticked as part of their investment due diligence, and I think that is a thing, and that's not going to change, and it's not going away. So again, it's very basically the sector wise, healthcare is really exciting. I don't understand it well enough to give you a sensible comment, but I think there'll be a lot of people who are very successful in the healthcare space over the next cycle. I think that's natural from where the demographics are of our population and the population in Europe. I think healthcare is a big one. Age living, I think, is a big opportunity as well. So I think outside of Sheds, outside of sort of students and beds, it's meds, I guess, and healthcare, and that's really where I think the opportunities are.
Well, Chris, fascinating background. I love the simplicity and the simple approach you take to quite a complex industry, and you've been phenomenally successful with Pete and the wider team in terms of what you've done. I know you're hugely ambitious as well, and you've got a lot of drive, so I'm excited to see what you guys go on to build and see how you kind of navigate this current cycle as well.
Thank you. Well, thank you for having me, Matt. It's been a pleasure.
Thanks for listening to this episode of the People, Property, Place podcast. If you found it insightful, feel free to share it with a friend or colleague. Subscribe, give us a rating, like or comment. It helps tremendously. It'd be great to hear from you on LinkedIn. I'm super open-minded to recommendations of guests we should get on the podcast or areas of the market we should explore further. So do drop me a message. The People, Property, Place podcast is powered by Rockspring. The team recruit experienced talent for investors, owners, developers, and operators. So if you're considering your career options at the moment or looking to attract top talent to work for you, head over to the website www.rockborn.com, where you can find a wealth of research to aid your search. Have a great day wherever you are, and I look forward to catching you next time.